Okay guys, just a very quick weekly forecast session. I've already posted up the screenshots from this, but we'll go through the logic, assess the price action and see exactly where we are on top-down analysis. So when we get onto the monthly time frame, we can effectively see that the market has had a monthly rejection. Tail end of last month, we've got a monthly rejection wick that has formed, which is obviously all-time lows that we're looking at the moment in terms of the market on Oanda. When we then get down onto the weekly time frame, we can see the weekly rejection from last week as it has been formed. So obviously this entire wick for us is a level of absorption. It is demand on the lower time frame. When we get down onto the daily, we can obviously see how it rejected out 26th of September, came back, retested, 50% was taken on that retest. No, close to 50%, sorry. So again, that's still an exposed wick according to us in terms of the inefficient wick strategy. So we've still got inefficiency at this point below that lowest wick on the bullish rejection. That still needs to be mitigated for the market to move out of this zone. Now, this is an area of interest for us. I'll leave that on because I don't know if I've got that fib marked. And then when we get down to the 4 hour, we can see how the market has come, taken highs, respected the push out of this zone, which kind of broke the bearish move that came down, bullish engulfing over 3 candles. The wave broke the highs, came back, retested and moved out of the zone into supply now. So we're currently sitting under supply, and even when we go down to the 1 hour time frame, we can kind of see how the accumulation of orders at this point here has been holding up price for quite a bit. Institutional orders, big boys, are sitting up here, obviously causing price to rally and consolidate between this range at the moment, looking to tap into supply on the higher time frame. There's no real point going down to the lower time frame because you'll see pretty much more of the same, although it's just basically tighter zones and more areas of liquidity. But the 15-minute and 1 hour for us at the moment is sufficient to assess where price is. When we then look at any of the fibs that we were interested in prior, let's turn those on. They are on now. So supply and demand. Okay, so as we said, we have the monthly rejection wick, which is also a weekly rejection wick, and then we've got demand within demand. So effectively what we've done is we've taken the bearish momentum down that broke all previous lows. That's a wave. So this entire wave we've marked up with a fib. So we've gone from highest point to lowest point. Okay, we've kind of determined that the discount zone sits now below this level. So let's pull that down. So that's the discount zone, and then we've got demand within demand on the higher time frame, and then effectively we're looking for areas of interest that we'd look for the market to move out of. So when we get down onto the 1 hour here, we can see how the market's respected supply, came in, tapped into the fair value gap middle of the week, and then effectively rejected down in Friday, back up and consolidated just below where it moved out of as supply. So again, on the move on Friday, let's break it down. So we've got demand within demand on the higher time frame. We're expecting the market to come down into the discount zone here, into the lower discount zones, extreme discount at this point, to then move out and go bullish. And on the lower time frames, when we look at things, we can see that we've obviously got a wave here that was formed, tapped into demand. Demand broke highs at this point. Obviously these highs were taken, these highs were tested and then broken, and then we're into fair value gap and supply at the top. So this effectively also was a bearish wave that took lows previously, that took highs effectively further back. So it's an area of interest for us. The discount zone in this sits above here. We're looking within this zone for sells, and then in essence we're looking for areas of fair value gap, liquidity, key values, key areas, and imbalances to kind of see how that works out. So when we turn on our key levels, we can see that we've got supply, we've got key levels above us existing. This may change through Asia. We'll see what happens as Frankfurt opens in the morning. But effectively, we've got the market printing for us what looks like a sell intent. So we've got breaker structure to the downside, retest, back up towards supply, fair value gap. Rejection wicks above, just under supply. Supply was tested very, very shyly before. We've got areas of supply even above that and areas of liquidity above that. that have obviously been respected previously. So it could be that the market comes up, liquidates these highs into supply or any of these key levels and then rejects down. But we're anticipating a sell early part of the week down into levels of demand to then possibly dive down deeper and then buy out later on. But that's the projection. We will see how it kind of plays out and see what the market kind of shows us in terms of the absorption we see on the footprint, the splash orders going in, institutional orders going in, and price holding at certain levels. But in terms of price action, this is what we're looking for on the way down. We've got demand that's already been respected. It could have been weakened at this point. We've got large scale orders going in. We've got areas of key level on Friday that could possibly hold price just below the discount zone and then reverse it. And then we've got a larger 15-minute time frame here, which if we again look at the wave that was marked from this point to this point, we can see that the discount level is actually within this zone here, and we're looking to see if we get a confirmation for buys out of that discount zone. Then obviously on the higher time frame we have a larger scale zone which has also been marked. So we've got this point up to the top here, which is the wave that may well be respected, and then we can see that the discount zone on the weekly rejection wick is where all that demand on the higher time frame sits within. We've got key levels, the areas of liquidity and imbalances even within that could be tested, respected, and then bought out of. So again, we're looking for sells to buy, and we'll see which zones get respected and how the market reacts. Not looking for long-term holds at the moment. We'll just see exactly what happens. The Bank of England and the Treasury, as well as the government, the Chancellor, are kind of having a bit of a tussle at the moment, and it's all around the discussion of quantitative easing, quantitative loosening, tightening, and at the moment it seems as though the government is at loggerheads or in contradiction to what the Bank of England wants to do, and therefore it's not a good prospect at the moment for institutional investors, because they are going to be getting less for their money. It's a very deep topic in terms of the government securing investment against government-backed bonds, but it's not going in the way that it needs to at the moment. So at the moment, even though the GU has rallied, it's not looking favourable short term, because the institutions are not happy with the approach that the government is taking. The Chancellor specifically and the Bank of England are not agreeing with their approach, but they are possibly in talks to have that matter resolved. So it's a space to watch at the moment, and we'll see how it kind of plays out. If they kind of do align their understanding and the way they want to tackle coming out of the lows that we are at the moment, then it may well be great news for the GU, and maybe looking at some bullish movement soon. But at the moment it's still a bit trepidating. It's in limbo, and we'll see what happens and what reactions we get. There are some news throughout the week. We'll see how they play out. There's a couple of red news, and we'll kind of watch those throughout the week and see how it goes within the group as well as on social media. As Sebastian has also mentioned, we are not now going to be releasing any new content on YouTube for the volume traders. The course in its entirety has been completed. Everything that you need to know has been released for free, and there will be no additional content available. So whatever you have is pretty much everything that we have to teach. There's no need now to put out additional content or videos just for the sake of views and likes. The course is complete, the information is complete, the education is complete. It's now for you guys to decide how to utilize it. And again, if you wished to kind of have a bit more in-depth understanding of how we read the charts on a daily basis, the discussion that goes on in the group chat, it is open. It will not be open forever, and people are benefiting from it at the moment, but it's something that is short-term, and possibly could be something that is also closed down in terms of new admissions soon as well. So I think we have until the end of the year. We'll see how it goes, and then we'll decide what to do. Okay, take care guys, bye.